What's up traders, welcome back to Failure to Displace. In this video we're going to take a look at this morning's London session and the two macros that I trade in that session. Now today is a low probability trading day because it's Thanksgiving in the US, so volume is very low, as we can see by the gappy price action coming into the London session. However, there was a setup. It's very similar to the setup that we had in my last video yesterday, so I want to document this because once we get these patterns embedded into our brains, you'll see them occurring very often. The setups are often very similar. So let's jump into the analysis now and see how this thing played out. Just a quick side note before we do jump into the main analysis. If you're not already funded, then do go and check out apextraderfunding.com and be sure you use the code up above to get the best discounts possible. I basically use them just as a demo account to get myself familiar with trading in live markets, as well as the opportunity to get funded. If you become profitable, you'll also get access to live market data, which TradingView will charge you extra for anyway, and you'll get access to real-time delta data, which is something that you'll see me using extensively in my analysis now, just to add a confluence to my ICT entries. So do go and check them out, use the code above to get the best prices, and with that said, let's jump into the analysis now. First of all, the one thing I want to note, yesterday during the New York PM session, price action was very bearish. Essentially, we opened up at 9:30 and price just dumped. So we are marking out the previous day's value area high, previous day's point of control, and previous day's value area low. However, coming into this morning's session, we are above previous day's value area high. So we're not inside the previous day's range. So it looks like we are retracing this very bearish drop from yesterday. So because we're not into previous day value area, we've got to use different levels. So the levels that we're playing with this morning are actually the previous week's value area high. So that drop took us back into last week's range. So we are interacting with previous week's value area high and the Asia high liquidity. So as I come to the charts, I'm coming to the charts at 6:30. First thing I'm looking for is the initial buy side liquidity and the initial sell side liquidity. So to establish those two levels, we're looking at the first 30 minutes of trading from New York midnight open. So that's midnight to 12:30 here. We can mark out the highest high and the lowest low. As I come to the charts at 6:30 or 1:30 even New York time, we can see that we've had a sweep of the initial buy side liquidity. Price has retraced, but it's failed to have the momentum to take out the initial sell side. This is exactly the same as what happened yesterday in the video as well. As we're coming in at 1:30, we can see price is grinding higher, and our draw on liquidity then, given the fact that we failed to take out initial sell side, is going to be Asia high up here. And in confluence with Asia high, we have previous week's value area high as well. So coming into our first macro, price grinds up into value area high from last week, sweeping the Asia high, but literally gives us no opportunity to go short. There's no manipulation higher, taking traders the wrong way, and then a reversal. It just continues to grind higher. After the macro closes, we then see a pull back aggressively into value area high. So it's taken us back into previous week's value area. Approaching the second macro, which is 250 to 310, we can see prices consolidating over the top of previous week's value area high. And again, very similar to the last video that I dropped, we have this fair value gap. Let's get rid of this. Turn this to a fair value gap because at the open of the macro, this fair value gap was holding price higher. So we can see it's tested. Price is respecting the 50% level. So this is the most important level when looking at fair value gaps. Are we encroaching through 50%? Now ICT said high probability fair value gaps, price shouldn't spend a lot of time in the fair value gap. So because we are constantly retesting this level, this is making me believe that this fair value gap could well fail. It's putting me on guard for this to flip into an inversion fair value gap, because it isn't instantly rejecting price. In confluence to that, we're having CVD divergence here. We are seeing bullish delta, bullish market buyers trying to push price higher, but they're unable to take this high, which means that we have a large sell limit up here absorbing all of the market buyers trying to push this higher. So we're showing that a bigger player wants price to stay here and ultimately go lower. So we're trying to trade in line with those bigger players, not the market buyers that are FOMOing in expecting this to go higher. Let's just pull up trade of it and we can see this CVD divergence right here. So we have the aggressive drop back into value area here, and then we can see these highs. As we come into the macro, we've had a significant increase in buying pressure. Market buyers are coming into the market trying to take this through, and they're unable to take this high out, and price ultimately reverses. We've got our CVD divergence here showing absorption, and then looking very closely at price action, this large manipulation out, sweeping this liquidity, and then this bearish candle with an aggressive move up, but then another aggressive move back down, breaking this candle's opening price. This, although it's two candles side by side, is actually a change in the state of delivery. If we were bullish, this opening price shouldn't have been broken. It was broken, which validates this as a bearish order block. Again, giving us a level of resistance, and we can monitor the 50% level of that order block to see if it's being respected. Price respects the fair value gap, tapping 50% one more time, comes back, taps 50% of the bearish order block, and then ultimately rejects back into the fair value gap. So this candle that we have here is our delta divergence candle. So let's bring up trade of it again. So we can see here that this had bullish delta. There was more market buyers in this particular candle buying up price, trying to take it higher. However, the candle still finished bearish. This isn't a high probability divergence candle because of the long wick. So we can still see buyers did have quite a lot of control in this candle. It's this rejection candle that would give me the indication to go lower. We retrace up, we have a divergence candle, we then have a retest of the bearish order block, and then we have a closure ultimately below the 50% of this fair value gap. So that's the key takeaway here. We've managed to close through 50%. We would take the short from the close of this rejection candle here, having had confirmation that this is indeed going to be an inversion fair value gap. Stop loss is going to be above the order block. Price shouldn't go beyond that point if we are indeed now in a sell program. And then we're looking for targets, which we have relative equal lows here. We've created a couple of equal lows here, created another low at this point. So we're generating liquidity for an initial target. But we also have our initial sell side liquidity. Give us our 10 points, which is what I'm looking for. And an added confluence is the fact that price has pulled away strongly from VWAP. So this rising blue line is VWAP. Price is attracted to VWAP. If it gets too far away from it, it acts as a magnet and will often pull price back down again to test that particular level. Again, we can use that as a confluence for our 10 points. And that's ultimately the trade. The takeaway is we are waiting for the macros to indicate our interest in entering the market because that's when we know price is likely to start moving. And then we're using our confluences of CVD divergence, showing absorption, delta divergence in this particular candle, and then ICT concepts, showing us that we are potentially entering a sell program by creating an inversion fair value gap. Therefore, bullish PD arrays are failing and bearish PD arrays are now being respected by paying close attention to the 50% level of those respective PD arrays. And again, this is the type of trade that we want. Essentially zero drawdown, straight to our 10-point target that we've highlighted. Nice, fast, aggressive move, taking us in and out of the market in a matter of a few minutes. So that is the trade from this morning. That's the analysis. I hope you found it useful. If you did find it useful, then please do give the video a thumbs up. I'd really appreciate it. And consider subscribing as well if you want to see more content like this one. And if you have any questions or comments, do leave them down below. It'd be great to get your feedback and see if there's anything else I need to cover while going through these session recaps. Again, thanks for watching, and I'll see you again in the next video.